Hi and welcome to this Blueberry Markets video update with me, John Kibler, Senior Market Analyst. In this video, I'm going to take you through the week ahead. We're going to go over some data that's coming out this week, as well as some charts to watch. So just coming on to the data then, we actually have a bank holiday in Japan tomorrow, but we also have Chinese New Year or the Spring Festival holiday. So we're going to expect that to impact markets associated with China this week. So things like the Hang Seng, maybe even the Australian dollar could be slightly affected this week by this bank holiday. So we've also got some data coming out of the Bank of England. We've got Bank of England Governor Bailey speaking. He's actually speaking twice this week, once at Loughborough University, and then on Wednesday he's actually talking at the Economic Affairs Committee. So it's going to be very interesting, these two announcements. So we could obviously see some kind of movement on cable. We have a lot of pound data coming out this week as well. We've got claimant count change, but more importantly, we've got CPI year on year expected to rise from 4% to 4.1%. And we've got GDP month on month, which is actually expected to see a decent decline here from 0.3% to minus 0.2%. And then we finish the week off with retail sales month on month expected to rise from minus 3.2% to 1.5%. So I'm expecting some volatility on the pound this week. We then have data out of the US. So we've got core CPI month on month, CPI month on month, CPI year on year, all expected to come in either as previous or a little bit lower. And we also have some core retail sales and retail sales figures coming out of the US, as well as PPI. So lots of high impact data this week involving the pound, involving the US in particular. So I think cable is going to be a volatile currency pair to watch going into this week. Going on to the currency strength meter then, so not too much in the way of change, although the New Zealand dollar has strengthened significantly, as well as the US dollar. The US dollar now coming up into that +5 territory, into that sort of reversal zone, and where the dollar index sits at the moment is quite interesting. Swiss franc has decided to kind of weaken as well, and we've seen a little bit of a decline there. So Swiss franc weakness is definitely something that we were looking at. We were looking at dollar Swiss longs last week, and those proved to be fairly fruitful. Going on to the US dollar index then. So this is where it gets interesting, because we're at this 104.50 area, and you can see it was this previous high that formed between November and December of last year. And I think if price breaches 104.50, it could really open up for a move towards the 106, which was another high that formed back in November of last year. So it's going to be very interesting. Can price break through 104.50? Can the dollar strength continue? If it does, I think we need to see a close above 104.50, which will then enable us to look for the opportunity to see the dollar climb towards that 106 level. If we hold below 104.50, the next sort of support area is down at 103.50, which is this sort of consolidation that formed previously. So we could see a decline towards 103.50 or a move above 104.50 going into this week, depending on how that sort of data out of the US does come out. Obviously, a lot of data has been missing in the US recently, in terms of it's coming in a lot stronger than expected. So we could possibly see some more misses this week, and if we do, it could influence some further dollar strength. That brings me on to Euro US dollar then. So we've actually found some support down here towards the 107.25 handle, which were these lows that formed back in December. The buying pressure hasn't been very aggressive here. In fact, we've seen sort of a slow sort of pullback into these previous resistance levels towards the 1.08 handle. So I think this is going to be a very significant level for Euro US dollar. I think if we do get that sort of dollar strength return to the markets, then a move back towards these lows makes a lot of sense. If we don't, and we see a breach back above the 1.08 handle, the 1.09 just below that area is quite interesting, considering this was an area where we saw strong selling pressure in the past. So we could see a move up towards that area. Moving on to cable then, so I'm on a H4 time frame here. We can see that the market's been in this sort of medium term range ever since the sort of end of December through to most recently where price broke to the downside. We're now back at those range lows. We're at that one spot 26.25 handle. Now if we were to look at this from a weekly time frame, it looks like a large sort of pin candle that's formed here with a sort of close above the extreme of the range low, that one spot 26 handle. So in theory, from a technical perspective, that could obviously lead to price kind of pushing to the upside. So it'd be interesting to see how price does react to the data coming out this week. You know, if Governor Bailey is fairly sort of hawkish on the sort of economy in terms of keeping rates at a higher for longer, then a break above one spot 26.50 could see price kind of re-enter the range here, and a price maybe wants to move towards the highs of the range. One spot 27.50 and above could be targets for traders. If we hold here and we start breaching back below 126, then I think the one spot 25.25 could be revisited by price. The final chart I've got for you then is actually silver. So we haven't talked about silver for a very, very long time. I think the last time we spoke about silver, we were looking at opportunities on longs when price was kind of coming back down towards this area of support. So it's been a while since we've looked at silver, and the reason why I'm looking at silver as well is because we've come back into these kind of lows here on the daily time frame around about that $22 level, and I had to look at the gold silver ratio, and the gold silver ratio was at resistance. So that to me suggests that maybe silver could start to move a little bit more aggressive than gold. And you know, we've seen a sort of bullish break away from this $22 level. So if it can hold, then maybe we'll see a move back towards this kind of recently formed highs around about the $23.25 area. A breach above $23.50 would see price kind of head towards sort of 24.50 or even all the way back up to 25.50. If we breach the lows, however, then there is still some downside risk with these October lows towards the $21 level being something to look out for. So I think silver's in a good position at the moment, so it'd be interesting to see if we can see some developments in this market as well. Again, pegged to the US dollar, so that a lot of the US dollar is going to have a lot of influence on the market this week, especially with all those data drops that we see from the market. So thanks for watching this video update. I really hope you enjoyed it. If you did, please leave it a thumbs up and subscribe to the YouTube channel if you are new. Thanks for watching. I'll speak to you in the next one.